Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the Tuesday, the 4th of February, the morning after the night before, it has to be said, but Brent crude oil trading a little bit lower, it would appear. We've got down about 86 cents at the moment at $75.10. That was after the news yesterday or last night that the Trump administration was backing away from its all-out trade war with its immediate neighbors, Canada and Mexico. Let's kick off this morning in Australia with Peter McGuire, the CEO of XM Australia. Peter, my question to you is, was Donald Trump bluffing all along? And does it matter? Your thoughts?
Well, good morning, Sean. Good morning, everyone. And it's lovely to join you. First show of the year. Happy, all best of greetings from Sydney. Sean, I don't know. I mean, how can you wrap this up? Sunday afternoon, I was with Bloomberg. It was at 108, the US dollar index, 108.30. It hit 109.70. Now it's back at that 108.80 sort of handle. We've seen tremendous volatility. If this was a game or just testing the water, I tell you what, he's certainly done it, and the guns are out and he's made it happen. But he's got some action.
But if he's made it happen, ultimately, the boy can cry wolf only so many times.
Sure, but he's got, yes, there's no doubting that. I want to see what the response is going to be from China. That's the one to really look at, I think, and whether he's going to roll this across to the Eurozone and the UK. But it's very hard to wrap it up and summarize it because this is a moving target. And I didn't expect to see a response coming back from Mexico, nor really Trudeau, so quickly. But they have, and we all understand that President Trump has said gloves are off for 30, or gloves are on for 30 days, and he'll review it, I think, on the 4th of March, which will be his State of the Union address.
Let's go to Clyde Russell, Asia commodities and energy columnist, Thomson Reuters, in that wonderful Asian country of South Africa, but nonetheless a BRIC member as well. But Clyde, your thoughts on what all the last few days have meant for the energy markets? Because in either direction, the oil price certainly wasn't looking like it was under any duress, whether or tariffs were in place or now they're off, up or down 1% at most.
It is quite interesting. I think we've just seen China's response to the US tariffs. It's now put tariffs on all imports from the US, including energy. So that's oil, coal, LNG. The tariffs are enough, sort of 15% that it will kill that trade. Not that China buys an enormous amount of oil and LNG and coal from the US, but it does buy some. In the last few months, it's been sort of averaging 200,000-300,000 barrels a day. But up to 1 million tons of LNG a month and sort of around a couple of million tons of thermal coal. So for the Chinese perspective, this is a good way of hitting back because it's an insignificant, largely, when you're importing 11 million barrels of oil a day, losing a supplier of 300,000-400,000 is not a major thing. So from their perspective, it's quite an easy thing to do.
Especially when you have 1 billion barrels in storage.
Absolutely. And the other thing I think you got to look at the Chinese is that this probably means that they'll be very reluctant to sort of match or adhere to any sort of US sanctions on Russian and Iranian and Venezuelan crude. So the sort of shadow fleets and things that have been going on, they'll just carry on now. The Chinese will just buy from whoever they want. And, in some ways, Trump has given up his leverage over the Chinese by putting tariffs on them. So I think but what we have seen in the past, and it's quite clear, is the oil market in particular is really, really good at adapting to these sort of challenges and doing it pretty quickly. So China won't buy from the US. The US will probably be able to sell it to somebody else. And, the flows will just adjust. There might be a little bit of, impacts in freight rates and things like that. But in general, it's still the market will adjust, and there's nothing really that's going to change too much on the fundamentals. The flows shift a little bit, but ultimately, we're still really looking at what's the situation for demand going to be like this year. Is it going to be any stronger? And I think the effect that we really are looking at is, as the trade war wraps up, let's assume Trump goes after Europe next, then you're really going to start to see global growth slowing down, and that's going to be the big influence on oil, not so much, who's sanctioning whom.
Yasar Al-Maliki, Gulf analyst at the Middle East Economic Survey. Yasar, also yesterday, despite all the distraction, OPEC Plus was having a meeting in which they were looking at their sort of monthly review of the markets. They've kept everything unchanged, and that ultimately means a lot of shut-in capacity off the market still. Your thoughts of where OPEC Plus goes in all of this sort of Trumpian noise?
Thank you, Sean, and good morning to you and everyone. Well, I mean, with all of these noises dominating the oil markets, it seems that OPEC is the only player with its size on the long game or on the long term. I think, for now, they are maintaining their agreed plan to, unwind some 2.2 million barrels per day of voluntary cuts. They will get that back in small tranches, and it will take longer time than the plan before. They have considerable production production capacity that they need, spare capacity that they need to slowly, reduce. At the same time, they want to do all of this without adding to the market's or oversupply. So, tariff noises aside, these cuts have, done what they were supposed to do. They are maintaining a floor on oil prices. They are preventing a slow or they are meant to slow down the stock builds in this quarter amidst the soft seasonal demand. On the other hand, OPEC Plus focus remains compliance within the group itself. There have been some improvements over the past few months, although this has majorly to do with lower seasonal demand, both internally and externally in countries like Iraq, Kazakhstan, and Russia. Some upstream.
Is everybody behaving now in those countries?
Well, it seems on broadly everyone is doing their best, and it has to do with circumstances.
Doing their best. What does that mean?
Well,
you were a good boy this year.
Well, compliance has improved notably, and it has to do with some
analysis says they're still about 800,000 above target.
Oh yeah, I mean you have, well, it's a big group, and when you put everything together, the aggregates, yes, you're going to go above target. But by the end of the day, when you look at the overproducers, like last year we saw with Iraq and Kazakhstan, there has been a big move, over the last quarter of the year. And if you allow me, this has
big move as in they've come closer to their quota.
Yeah. And this has to do with not with, it has to do with a number of factors, especially with seasonal demand in the last quarter of the year, as well as, upstream refinery turnarounds, maintenance outages, and those have allowed for this. So, when we look at it, it remains to be seen whether this, can be maintained. You have Kazakhstan recently upgraded their Tengiz field. You have Iraq having a problem with its Rumaila field. So, kind of opposite directions here. At the same time, into summer, the Iraqis will need to increase their production, because they have some demand for fuels in power plants and so on, and associated gas. So there are a couple of dynamics. So these countries will need to keep compliance, on one hand, while their own needs on the other. And it will be interesting to see how is this balanced out. Just to get to the Trump point, I think OPEC Plus will keep a close eye on Trump's moves, but they will need to see evidence of a significant physical supply shortfall or impact in the market before they adjust their plans. And this is especially true when it comes to taking Iranian and Venezuelan barrels off the market through, stronger sanctions. So, given past experience, these were chaotically imposed, by the Trump administration in the first presidency. If you go back to 2018, OPEC acceded to the pressure to increase output ahead of fresh Iranian sanctions then. And, but these sanctions were ultimately delayed. I think, a a more, the blueprint, sorry, that they are going to follow is the one from 2022, when OPEC Plus resisted widespread calls to increase production amid forecasts of a 3 million barrels per day drop in Russian output, which,
Yeah, it seems to me that in some ways the calls from Donald Trump on OPEC Plus is kind of lost and in all of the other stuff. Peter, in all the other stuff, and why I asked you ultimately, was Trump bluffing? Because it comes down to, as everybody will be and is, and there was a lot of chatter on our own message group yesterday, what is his North Star? I mean, fentanyl trade across the borders of Mexico and Canada, that's his North Star for a global trade war? Or, did he react yesterday to the fact that he got a phone call from the president of Mexico, or because the S&P 500 dropped 1% or 2%? It strikes me it's a little more likely to be the latter, and understanding what Trump's North Star is. And I think there's a general view that it is the stock market index rather than fentanyl. Your thoughts on what his North Star is and what other, everybody in the world will be trying to assess that point from the bluffing and the North Star being the stock market and not fentanyl. Your thoughts on that?
Well, Sean, I think also he's got a consideration as far as rates, and we've seen some quite extensive rate cuts over the January period, and this week again we could see 25 basis points stripped out of Bank of England. So there's that talk there. You're looking at Fed fund futures. What's happening from the Fed's perspective? Are we going to see one rate cut or two, which naturally feeds into...
So you're saying he was bluffing then, because obviously you can't have tariffs and cut rates.
Well, it's a very delicate one, isn't it? When you're thinking about it all, how does that all move together? And then the next part, what's his strategy overall? I mean, the talk of as far as Greenland, what's he prepared to do? He mentioned 200 billion that he's giving in subsidies to Canada, that he's taking that off the table. That's what he mentioned the other day. So all of these factors and the strength of US dollar, he's very against the BRICS. And the overall theme is very much pro-America. So that would be, in my mind, a stronger equity market and quite possibly a stronger US dollar index back above 110, 112. The trade that everyone's looking at, everything else has taken a hiding. If you're looking at the likes of Bitcoin and crypto, gold's running hard at 28.50, 28.60. So there seems to be, I think, a natural move to that sort of mindset. Maybe this is a time to be in gold. Equities got hammered yesterday.
I think that was time a year ago. It's like gold has doubled in the last whatever 2+ years. It's constant, continuous increase in value. Clyde, it is. I mean, the actions of the last few days have been kind of, in some ways, counterintuitive to me, and from an oil market point of view, that we're seeing oil prices decline today because tariffs are not proceeding, rather than, which you would think in some ways the other way round, right? Oil prices should be rising because you're not going to have a trade war and economies aren't going to be damaged, and so energy demand will hold up. But here it seems to be going the other way around. What's your understanding of that? I mean, yesterday we had tariffs coming, and so prices went up. That doesn't make sense on some level.
I think the relief that he's not putting tariffs on Mexico and Canada, at least in the short term, you've got to separate out the short term from the long term as far as I can see. So the short term, there's a bit of a relief that this is not going to happen. So we don't really have to reorganize the oil flows into and out of America. So we can just carry on as we were last week. So Canadian crude keeps flowing into the US, so does Mexican. We don't have to reorganize that particular flow. So that's a bit of a relief. So that's why prices have come off. If you're sort of looking at the longer term thing, I think it's becoming increasingly clear that Trump equals volatility, that he's going to keep pushing and seeing what he can do. You talked about what his North Star is. I tend to, if you look at his first term, it was definitely the S&P 500 index. He kind of judged the value of his presidency by that. So I think what you're actually seeing is that if you believe that that is how he operates, you are actually going to encourage people to do exactly what Justin Trudeau did, exactly what the Mexicans did. And as soon as he does something to you, you prove you're just as crazy as he is, and you do it straight back. And if that kind of comes to that sort of thinking comes to the fore, it will be, you could actually find that
I
Trump
mean, it's the
blinks because he's
basic
like,
old
"Wow."
rules of the playground bully. You stand up to the playground bully, tends to back away.
Well, that's kind of how it goes. The interesting one will be what he does to Europe, because I mean, Europe has a reputation well founded in its actions of being weak and
Yeah.
divided and not really united in how to respond to these things. If the Europeans can actually stand up to Trump and say, well, you're going to put tariffs on us, we're putting them straight back on you, it doesn't actually matter if there's a short-term sort of disruption in that. What you're really looking for is to hit that S&P 500 index in the States, send it down, make rate cuts unpalatable for the Fed, keep inflation as an issue and a problem in the US, and then Trump's going to turn to the people who are advising him and say, what the hell? I mean, this was supposed to work. This was supposed to bring manufacturing back.
I mean, Trump likes looking at, we know he doesn't read documents. He looks at one number, the S&P 500 index. It takes him 5 seconds. He can go back to reading his Beano. Yasar, looking at the region from the point of view of the tensions around the geopolitical stresses in the world, the region of the Middle East, which has been the source of some instability last year, and we're now in a period of pause, a period of ceasefire, but not peace treaties, if you want. In that discussion, there was Iraq featured in some of that from the point of view of its facility. Iran lost its influence in Syria, it lost its influence in Lebanon, it lost its influence in Gaza, Hamas, whatever way you want to look at all of those pieces. But there was a view that, it still has Iraq. Your thoughts on that and that leverage or not? Is that an issue to be watching or not? Your thoughts?
Thank you, Sean, again. Just a bit before I answer that. So I'm just looking at some of the figures that we put earlier into the year for, OPEC's 2024 production and OPEC 9, the members that are, cutting, including those with voluntary cuts, they produced a 21.40 million barrels per day, and the allocation was 21.23. So they are just 170,000 above. Which is notably great. Notable improvement. Now let's go to Iraq. On the Iraq side of things, yes.
My question ultimately is there still an inherent tension inside these fault lines within the region? So this conflict could sort of reemerge?
Well, Iraq is when you look at Iraq, there are multiple layers into this country. You have the government trying to do something, you have political actors, and you have also militias, and the militias are supported by Iran. So within that sphere, within that political environment, yes, you have actors that are trying to be close to Iran, that are within the sphere of Iranian influence. Now, the Iraqi government is trying to balance all of that out. Its relationships with the US, with regional Arab allies, and with Iran. Now, the Iranian influence has really got a big hit after what happened in Lebanon and in Syria, but it doesn't mean that it has decimated or that it's not as strong as it used to be. At the same time, I think there is one very important factor that not many people who talk about this consider. The financing model of Iranian militias in the region is that they self-finance. Iran doesn't have enough money to, send them, not in all cases at least. And then the Iraqi case is really special because they have access to, the Iraqi markets, the Iraqi government finances directly, indirectly, mostly indirectly. So they kind of self-finance, which reduces the Iranian control over key decisions. So a good example of this is the decision to go and fight in Syria to defend the Assad regime. After the in the recent HTS-led offensive. which was very successful by the end of it. And there was a sense of resistance by the Iraqi groups that, they don't want to do that because they know what the price is. And the price is that they might, get to lose a lot economically speaking. Like what happened with Hezbollah and what happened in Syria and, what is happening to the Houthis. So that
What about just bringing it back to, obviously there's multiple layers, there's multiple scenarios. We're in a very small podcast. The idea of where does it, or is there any intersection in this Venn diagram that is, because obviously the Israelis are quite close to the Kurds in the north, and there is this fracture between Mosul and Baghdad, and as a result, no oil is flowing in the pipeline to Seyhan. So we have this triangle of suspension there, 400,000 barrels of pipeline. Is this geopolitical fracture or influence any place to play there?
No, I mean it's not. It's really simplistic to look at it that way, and what is happening with
the oil market is a simplistic place. Will that oil flow anytime soon because Iran is weaker in Kurdistan?
No, it has nothing to do with that. Let me tell you this, Sean. It is a purely technical issue that has to be resolved right now. Yes, there is a lot of political noise. We wrote about this last week, but now they have this agreement to amend the budget. That is a first step, for what to do next. But what to do next will involve a lot of negotiations between the Kurdistan government, between Baghdad and the IOCs. And it's going to be purely technical. How the oil is calculated, volumes-wise, remuneration-wise, what happens to 1 billion in, areas that the KRG has not paid the companies, what assurances on payments, to the companies can be provided. How is this going to work out? What's the fate of their contracts?
No immediate solution there, although they did seem to get close at the end of the fourth quarter, and then something sort of pulled them back. Let's go to the survey question and get a view from the wider room on this sort of thesis of today's podcast. Trump was bluffing on tariffs, or he won concessions, i.e. he's bluffing all along, or he won concessions and so changed track. So welcome your views on that. Peter, the thesis ultimately of the movements yesterday hasn't shifted a lot. You've focused in on the strong dollar element. How much of that is tied into this sort of tariff equation, or we're just seeing a general divergence in the market, as we've seen between the Fed pausing and the ECB, and as you mentioned earlier, the Bank of England now likely to cut further, and with that divergence, you have the strong dollar moving and the weaker on the other. Your thoughts on which is the greater influence here, the direction of travel, the Trump noise or the actual rates?
I think the Trump noise, Sean, and the reason for it is because the markets, if you put your mind back to September, we would have seen probably 5 rate cuts by the end of the year. That's what everyone had tabled in, and certainly by July or August last year. And I think that was the general move. The fabric of what 25 looked like, that's what everyone had on their mindset. Fed fund futures, the dot plot traders, everyone was there. It's all going to happen. They'll strip out 2% of rates, 2.5%, maybe 1.75, but it'll be very aggressive and they'll get some action done. Well, we were off to the races in September and Jay Powell cut that 50. And since moving forward, there's many traders are saying, will we see a rate cut in 25? Do we see only one at 25 basis points, or do we see 2? And so the action is US dollar's gone to the moon. You've got a euro sitting under 103 now. It was nearly at that 101 yesterday. So, and the Aussie's being crushed. You've got a yen, they're at 155. You had 25 basis points added on last week to the BOJ, and the pound sitting at 123.97. It was 122, and there was every chance you might be sub 120. So that dollar strength, Sean, is very, very dynamic. And no one can see the handbrake being put on for the US dollar at the moment. So that's from a trader's perspective. US dollar stronger. Markets are whipsawing when you're looking at the likes of equities, and we're 1 month in, and I think February is going to be showtime for volatility.
Clyde, in the middle of all of this, there is your favorite subject, Asian oil imports and China's oil imports, and where China has started the year. Obviously, we're just going to be coming out of the Chinese New Year celebrations. Where do you see China starting the year? A year ago, we were all very bullish about the general China outlook. What is your position now, a year later, with all of this backdrop?
I think it's hard to be very bullish China. I think their economy is not still firing on all cylinders. Certain sectors doing well, others not so much. So it kind of, to me, translates into steady oil demand in China rather than rising oil demand. I'm not with OPEC or the IEA, who are still, last year they were hopelessly wrong. This year, I think they're less hopelessly wrong, but they'll still be wrong. If you're looking at
they're too
imports,
bullish.
I think they're too bullish. I think imports are likely to be flat on the year, and that would be a good outcome. I think there's even a risk that they fall again. The other thing you've got to remember is that China doesn't like to buy oil when the price is high, and we've had a high start to the year relative to the last quarter of 24. So I think what you're actually likely to see from March onwards is actually a kind of pullback in imports, because that's when the expensive oil from January will be arriving. So my own feeling is a lot of it depends on price. If the price can go down, China might buy more. But if the price remains 75, 80 bucks a barrel, I think the Chinese imports will be steady at best. And I think with the Trump effect, you're going to see them swing heavily back to trying to buy those discounted barrels from Russia, Iran, perhaps Venezuela.
And is that same economic malaise, Clyde, and I know you cover right across the commodity sector, is that reflected in all commodities? That weak China posture?
It's reflected in some, but not all. So coal is very weak, for example, and you're looking at 4-year lows for most of the seaborne coal prices. But iron ore has held up remarkably well, and I think that's still on the basis of some optimism coming back into China that the residential property market is slightly stabilizing. It's not looking great, but it's not looking too bad anymore, and they're starting to see some green shoots in other sectors. So in my mind, the iron ore price has actually held up way more than it should have, especially since more supply is coming online. But yeah, it's hard to look at too much China and say, whoa, it's really going to drive commodity prices up this year. And I think the other thing we've got to look at is, with the US dollar being so strong, that actually almost puts a little bit of an anchor on commodity prices in US dollars, because people are sort of saying, and well, in their local currencies, the price has actually gone up, and it's gone up quite a lot. So I think the Chinese will be looking at that and sort of thinking, yeah, do they really need to buy as much as people think that they could?
I was reading an interesting report earlier this morning that was reflective of that China is even constricted by its ability to put more stimulus into the market, because it's having the opposite effect, rather than it being a stimulating sort of liquidity. It causes people not to spend and people to be more restrictive. You saw our last word with you mentioned once or twice in your earlier comments, and just hearing what Clyde had to say there, that the expectation that OPEC Plus will indeed bring back some of its, there will be an opportunity, there will be a demand environment where they can start to unravel the 2.2 million barrel a day cuts of the OPEC 8 that are OPEC plus 8 countries that are locked into that cut, that they've had to postpone that decision. They've a number of times now, but do you feel they will have a window to bring it back before the mid-year?
Well, it all depends on, the time they take the decision, which is, end March. They will have a, probably better visibility and some partially available data for Q1. And again, the latest agreement that they had in December, made sure that this is going to be done in small tranches. They will take longer time filtering back into the supply from April. The pace was slowed from 12 months to 18 months. Even the UAE's uplift, which was 300,000 barrels, that, will come into 18 months rather than 9 months. So they are very cautious. That's the idea with OPEC. And, as I answered this question before, everyone seems to be distracted by the noises. Everything is very erratic. It's just, reaction and counter reaction, phone calls, decision making, happens, very fast. But I
Is
think
there any crack emerging? Just speaking of the Trump demands earlier in the last, it's only 2 weeks. It feels like already a year that he's been back in office. But his call for trying to split up Saudi and Russia to put pressure on Russia to end the war in Ukraine by reducing its oil revenue. Is there any window of light between Russia and Saudi Arabia, you think?
I mean, the war in Ukraine has been going on since 2022, and the Biden administration has put really hard sanctions on Moscow, and they tried, to really isolate it from everyone. Yet, Russia remained part of OPEC Plus, and things, continued. So I don't think, this is going to change, that direction anytime soon, regardless of Russia.
Yeah, it is. Thank you for that. Very useful insights on the direction of travel. Of course, OPEC Plus, one of the big pillars in this market, China demand, and Trump and all of its associated pieces. Bluffing all along, according to at least most of the people in this room. He won enough concessions to change his direction of travel. I'm not sure about that. But nonetheless, this is, I think, a big question, because how you answer this question, if you're Brussels or Beijing or whatever, if you can target the S&P 500, that's probably a good strategy for countering Trump. Peter McGuire, you're awesome jumping in. We appreciate it. Clyde Russell, we didn't even get to talk about how the beaches are in Cape Town these days, but one of my favorite places in the world. Yasar Al-Maliki, as always, thank you so much. Really appreciate you getting up early this morning in London. Have a great day, everybody. All the best.
Yes, bye-bye.
Thank you.